What is up, Pickle Traders? Lee Ryder here, and it's time to do another analysis update video. We are in the new office now, so things are getting back to normal. Today is actually a holiday in the US, so it's a great time to go ahead and look at what we're expecting for the week ahead. So let's go ahead and get into it. Okay, without further ado, we're going to start with S&P 500, and we'll just keep working through the whole world, just kind of where we're at. So S&P, for a while, we've been talking about there needs to be some sort of kind of pullback, right? And we've been in this range for some time, over a month now, and you'll notice we're starting to get this divergence. Divergence here on the alpha prime. So I am cautious here. Yes, the debt ceiling issue was resolved, and we said we're going to raise the debt ceiling for 2 more years, but you know, the market was still overextended before that, so to me it just feels like noise, and we still need to move lower. So that's kind of what I think there. And yeah, other than that, I think, you know, our first target is, do we come back to this 4,100 to 4,000 range? This is kind of what I'm looking at in here. And you'll notice where the big buying pocket of buy volume was, and then the next buy pocket was here down at 3,900. So all this up here is mostly huge amounts of sell volume. This is usually indicative of retail purchasing these tops and not actually big institutional money. So I'm a little cautious. Once again, that's S&P. Okay, now moving on, we will do US 30. Yeah, it's been on a tear, same thing. And, you know, we're not seeing divergence, but we are seeing it at the top of the cycle. So my guess here, would we be pulling back into this green zone here? Where's my, yeah, one of these numbers probably here before, you know, deciding what happens. Does tech continue on higher? Does the S&P move higher? If the S&P starts to continue to genuinely move higher, like we actually range up after we complete a lower cycle, then I imagine the NASDAQ will continue not far behind it. But so far it is just leading the whole market move. So that's that. You know, we're at the top of the cycle. How much more can we go? I don't know, but our first targets are, you know, this 13.8 level, and then down here at the 13.3 level. So that's kind of what I'm watching. We are starting to see a bit of divergence here on the Alpha Prime Plus, so that's something to note. Also, SGA at 1, everything's cycled high. So for me, this is really looking like an opportunity for the short side, not the long side, even though we're not necessarily seeing short signals yet. Okay. Next is the Dow Jones. This has been one that, you know, it has continued to fall to the downside like we had kind of thought. Unlike S&P and the NASDAQ, it's also completed its full cycle without much interruption. That makes sense because the Dow Jones, these are not names that are generally big hype names. So we would expect that there's less volatility with news in this market, which is why I think we're seeing it as we are. Now, with that being said, it is time to kind of start heading back and retest this volume point of control. As we know, that's where value's at. So something like this possibly we will see. I don't know. Obviously, we can just watch. But if the other markets are an indication, we're going to look for range-bound trading as we are finishing up digesting whatever information the market is digesting. Okay, moving on. This is the Euro Stoxx 50. This same thing, we were kind of high in the cycle a month ago, and it looked like it was rolling over. It did, but it stayed quite tight, and you'll notice all of this buy volume down here. So Euro, is that going to be a place where the world is looking for safe haven? I don't know, but just looking at where we're at in the cycle, this looks like a good time to start looking for long opportunities, just because we finished the cycle. If the rest of the world is going to start to move higher, based off our debt ceiling, based on the assumption that we're printing more money, maybe that's being priced in here. But yeah, pretty low in the cycle. It looks like a good time to retest some of these highs. So I would put this back at this 4,400 level to retest this high and see if we actually push higher. Next, we have the FTSE. Now, this is one we had been trading to the long side, and it eventually broke down short. Basically, we traded this whole range pretty much through here. Let me do this. Yep. Oh, where's my box? Yep, pretty much all through here. we trade this low to high range, and it just broke lower. So more lending to the rest of the world that we needed to kind of unwind some of this high price action that we had all over the world. The FTSE was a good example. And we can see that we've completed some of these cycles now down to the downside. So it looks like, once again, we are at a place of strong support, and it's time to retest that point of control to see, are we indeed, here at value or not? Are we going to continue, or do we break down this direction after we move lower? I don't know. We'll see. But this is what I'm watching. Next target is this 7777 level, 7800 level. Okay, next we have the Szechuan Index. This is China, basically. We had once again talked about, a month ago, a month or more ago, that it was high on the cycle and rolling over. We were getting this kind of second bump up after we had already seen this diminished momentum, right? And we can see that through the alpha prime moving lower, prices moving lower. So this looked good. And as we saw this failure around the point of control, we said, hey, probably want to move lower. And we did, but now we're getting to the point where we're getting so far oversold, we're starting to look like an attractive buy opportunity, back up at least to test this point of control, right? This would be my guess. Even if we do end up continuing lower, it's very likely that we will need to come up and retest that point of control just to verify that we are at value. Now, China has been, kind of the glimmer of hope around the world, but there's been a lot of talks, nascent talks about their failed recovery that's coming. Yeah, I don't know. I don't live in China. I think they probably do what they want to do regardless of what we do. So let's just look to the price charts. And what it looks like is that investors are just a bit spooked by this market, and that's what we want to continue watching for, is if we see continued downward pressure like we're seeing now. Okay, next we have Japan. This has been one that we have liked for a long time. It has been a little glimmer of hope as emerging markets in general, and I don't really hate to call Japan EM, but it's just not so traditional lately. The U.S. and the Western world has been such in the spotlight for investment activity that now Japan is getting the due diligence. Basically, I think a lot of it has to do with this semiconductor market that's happening with China getting these embargoes put on them. So we'll kind of see. But Japan is looking quite good. Yes, very high in the cycle. Alpha prime rolling over. So for me, even though we've been continuing, I'm going to be watching this, this 30,000 structure very closely because if we don't hold here, I imagine, we will retest this value point of control down here at this $27,000 range, which would present some fantastic opportunities to get in on the short side there, trading those CFDs. So that's it for Japan. Okay, iShares Emerging Market. I changed up what I'm trying to how we look at the emerging markets. I was using the FXCM one, and they had a flash crash that eliminated like 80% of that ETF in like 2 candles. So I didn't feel like it was a strong one to be using. So we're going to move to the MSCI Emerging Markets iShare, and we'll see how that goes. But we're just trying to get an idea of how emerging markets are working. And they had been, kind of moving up as investors are finding other safe ways to trade. But as you'll see, we're trading at value here. So right now, really critical is these ranges that we've defined here at this 40 range, and then down here a bit below it at like this 36, 35 range. We really want to watch and see what's happening here because we're basically at value. And yeah, what happens when we don't hold value is we generally fall to the other side and develop new value. So to me, this is looking like maybe the world is exiting this trade. We will see. Okay, crypto total. We had this big, big fall off, like I had said, from this when we had broken above the 1 trillion, then 1.2, and then we were cycling high then, right? This is back in April. So about a month ago, and it did come off just like we thought it would, but we are now at a point where we're finding strong support. We're coming back up to retest this value area. So once again, this is going to be very critical. This range that we formed from here to here. Oh, sorry, that was the wrong one. That'll work. Yeah, that'll work. I don't want that. This one. Yep, this range that we formed here. So this is kind of what I'm watching now. You're getting a lot of sell volume right here, but you'll notice we're starting to pick up the buy volume. So what I'd like to see is more buy volume picking up, and then probably pretty good to trade back up to that 1.2, 1.3 range. Definitely cyclically timed. So as y'all know, I'm going to be looking to the cycles to kind of guide me as to what we're doing and where we're at. I've talked about this a ton. It's hard, you cannot predict exactly where the market's going to move. That's ridiculous. All we can predict is that the market's likely to move one way or the other, and then we just have to buy our ticket to get on the train to see if we're correct. So that's the idea of trading. But yeah, crypto, I think probably a retest up to the high side. If the market keeps moving higher, maybe crypto pushes lower if inflation fears are over, but it seems very unlikely that inflation fears are over, which means likely crypto market will remain quite strong and relevant. So the same thing to find these ranges. All right. Last but not least is gold. We've been talking about gold for quite a bit now. Same thing, that it needed to come off. This was back in April. I said early May and April that we need to come down, and we have just been steadily riding down ever since. You can see back here, I'm always talking about divergence. This is a great example, and we even called it when it was happening, but here's the alpha prime moving lower, and then you have price that's moving higher. Oh shoot, why do I keep losing this? And then we have price that's moving higher. So that was our first step. And then basically the market's been down ever since. But we're starting to get to a point here where we're getting some strong strong support. So this area here, we want to be really not cautious, but we want to watch and be careful, because we have a good chance to play back up to this 1980 range. And then from there back up to that 2000 range. So that's kind of what I'm watching here. Something like this. Yep, see if we do this, if we follow crypto. Like I said, it'll all kind of be indicative of what the overall world market does. Are we worried that inflation is going to continue? Do we think it's over? Do we think the Fed has control? I don't think anyone thinks the Fed has control, but we're just playing by the rules we have. So I hope that was helpful, y'all. We'll get these a little more regular now that we're in the new office and the new location, and start to get the markets hopefully heating up as the year pushes on. I hope that was helpful. We'll see you in the next one. Goodbye.